Ladies and gentlemen, thank you for taking the time to be with us today and welcome to the In-House Council Forum program for 7th webinar in this series. My name is Purti Minawala and I'm a partner in Khaitan's corporate M&A practice group. I would like to extend a very warm welcome to every one of you in our audience, whether in India or around the world. The In-House Council Forum program is designed to provide training and education in legal operations, business management, and substantive law relevant to General Counsel and their in-house counsel teams, as well as discussion forum on contemporary issues relevant to the in-house community in India. Our subject today is doing business overseas. On the slide is the agenda for today's webinar. In summary, we will have an expert panel discussion followed by Q&A session with audience questions. While we have already received several audience questions, if you do have any questions, please submit them using the facility provided in the webinar portal. If we cannot cover all questions during the webinar, we will respond offline by email right after the webinar. Also, please note that a copy of the presentation, summary notes of the discussion, and a recording of this webinar will be sent to you after the webinar as a matter of course. With that, we'll just dive into the background. As Indian companies continue to expand their footprint beyond our borders, they face a diverse range of opportunities as well as risks, regulatory hurdles, compliance challenges, cultural differences, taxation issues, and contractual complexities. While the rewards of potential growth in international market are significant, so too are the pitfalls, sadly so. For an in-house counsel, the role is both critical and complex, ensuring that the risks are identified, mitigated, and balanced, while all times ensuring that the ultimate commercial objectives are met. This requires not only legal expertise, but also strategic judgment, cultural sensitivity, and close collaboration with external advisors across all jurisdictions that they wish to enter. Today's discussion will help us explore how to identify the key risks, mitigate them effectively, learn from common mistakes, and hopefully avoid costly missteps. Everyone who has registered for this webinar should have received by email a summary of the panel members and their credentials to speak on today's topic, so I will not spend much time introducing them. Suffice to say, they don't need any introduction as they're all experts in this subject matter and more than qualified to share insight and their perspective on these issues. On the panel today, we are joined by Mr. Deepak Acharya, Group General Counsel Aditya Birla, Ms. Tejal Patil, Senior Vice President and General Counsel Wipro, Chitan, Deputy Head M&A Partner, Capital Markets Raja and Tan, Singapore LLP, and Samir Shah, Partner from our very own Khaitan and Company. With that, let's start with our discussion. Deepak, sorry to put you on the spot first, but we need some guidance from you as to what are the common legal and regulatory risks that Indian companies in particular face when expanding overseas.
So thank you very much, Purti and KCO, for giving this opportunity. As I normally do, I start with the disclaimer as a lawyer. The point of view that I'm expressing here are my personal point of view and not that of ABG. But of course, I'm drawing from a lot of the experience that we have from the ABG. So, Purti, this is a very relevant question, has become more relevant in the recent times. And I'll tell you, in last 5-6 years, India's position in the global order has changed significantly. And, we are growing in terms of economy, we are growing in terms of our business influence, we are growing in terms of our political influence. And that is raising a whole lot of different challenges for the government, for the businesses as well. As we all know, most of the legal challenges that people get and businesses face outside of India are driven mainly by geopolitical considerations. Of course, there are compliance and compliance related issues that one must comply with. But at the same time, there are laws and regulatory actions which are driven more by geopolitical situation as we see emerging now. And in last, couple of years now, and everybody understands what I'm saying, a lot of geopolitical change and a lot of these issues are now coming to the fore. And that then becomes the, center point for the general counsels to look at and handle it. So my personal experience has been while dealing with the international businesses. Now in ABG, we deal in 41 countries across 41 markets. We have a presence, and we have actual legal presence in many of these markets where we have lawyers based out of those countries. Um, I would say that understanding what is happening in those markets and making sure that we are able to have some kind of a red flag or some kind of an forewarning of things that are likely to come is very, very important for the general counsel. So I would say that understanding of the marketplace is the most important aspect, and the geopolitical considerations have really become the most important aspect for the general counsels, apart from the usual stuff of compliances, making sure we understand the law of the land and how we do the businesses, etc. But I would certainly place geopolitical considerations as on the top of the list for any general counsel.
Great, Deepak. I think we are also very fast seeing this expectation from general counsel that we are speaking to get a cultural and geopolitical lay of the land of the territories that they enter to. So when we brief a local counsel, that's one of the first line of questioning that clients have started asking, vice versa when they come to India, of course. Moving on to Tejal, to bring in your specific experience, given that you are an IT company and it's all the noise that's going on right now in the industry. What are the key legal and compliance risks for Indian IT companies when operating overseas? And more particularly, can you shed some light on how Wipro addresses this on a day-to-day basis, which is, of course, a dynamic position for you to be in?
Thanks for the question. And, I take the lead from Deepak, who was my predecessor at Wipro. So one of the things I want to sort of just start out with is I'll give you a scale of Wipro first and then go down to some specifics, but we're in 65 countries. IT services was one of the first industries in India to actually go out and bring in, and we're the sort of largest piece of employment as well as export revenue. Now, the thing with services is that we're talking about majority of the people in India. So we have about 2 lakh odd people in India and about 50,000 overseas. You're giving the delivery from India. Your clients are generally based overseas. So it's an interesting dynamic of doing business overseas in a different way because our people are our manufacturing. The other piece I wanted to bring out, which is what Deepak said, is we have 146 nationalities. And the geopolitical situation today is bringing that to the fore also in terms of nationality, citizenship, location, etc., which was not really the case, as in that much sharpness in the past. Taking that a little further, all of us Indian lawyers are really trained on common law. I mean, of course, now everyone sort of goes to the US for a master's or has studied somewhere else, but it's between US, UK. We pretty much are comfortable with common law. We've been more comfortable with common law countries than we have generally with civil law countries. And now with the rising market in the Middle East, you have the Sharia law, which is something that we're not trained on. So I think there is a piece of the world that we do not get training on. And I think one thing to interweave into this is really important is do not underestimate requiring experts. Because we are general counsels, we are generalists by nature, right? And the one sort of piece that, even Wipro does, which is what Deepak also said, is we have counsels in many of our major jurisdictions. I think it is important to create that expertise in that jurisdiction. Data privacy and AI. I mean, really the all-pervasive laws right now, have hit our industry sort of much more in terms of requiring a very deep understanding. One of the first sectors to look at GDPR was the IT services industry in the country. So We're very comfortable with GDPR. But now, with 79% of the world having their own data privacy laws, including India's, where the draft rules have just come out, there are subtle differences in each of these, jurisdictions, which is causing, a compliance, situation. AI, the same way. No sort of standardization in the way the countries are approaching AI because their political philosophy and their philosophy towards their industry is playing a huge part in the way they approach AI. Last but not the least, really now the latest in the news, mobility and immigration. The ability to do business overseas is very dependent on the ability to also have skilled labor wherever you need it. And there's the restrictions that are coming in on mobility due to various reasons, is something that a normal general counsel, would not have either studied in law school or grown up with, in the industry. So we are facing all these laws which we've never studied for, very particularly new ones. And on the compliance side, I would say another area, which is something now, of course, a lot of people specialize in, is cyber fraud. So when we look at cyber fraud, we're also looking at a whole criminal angle in the corporate world, which I think is also new and is going to continue to be, of great importance, because we, in India, we kind of have 7,000 incidents a day. And like we've already lost some 22,000 crores last year due to cyber fraud. So that we're just talking about India. And then when you talk about a context of clients being abroad, you being here, or you being in all these countries, anything that happens anywhere affects you. And one cyber crime spans several jurisdictions because you could have the consumer and the data residing in various places. So I would look at all of these as sort of the new set of laws that are affecting the industry today.
Excellent, Teja. So what I hear from you is that, and Deepak, this is again pulling in the same thought that the time is right to be investing in the right legal talent, whether you do it in-house, but right before in-house, at least in the right local external talent. Lawyers are no longer a cost, which is of course music to all our ears. But with that note, I'll move to Samir, who's our resident external expert along with Chetan. But Samir, for now, how do you see ESG considerations influencing cross-border deal making for Indian companies? Especially, let's call it, Indian companies are still trying to digest the whole ESG agenda, so to say. So, what do you think Indian companies are doing there, and what should they bear in mind while approaching overseas businesses?
Thank you for that excellent question, Purti, and a very, very warm welcome to all of our listeners and to my esteemed panelists. I would say ESG would just dovetail into what Tejal just said. It's another thing which probably wasn't around when I went to law school. We've always had environmental laws and labor laws and what have you, but the fact that it's become a focus area and is so quickly moving from a nice to have to a must have. In several jurisdictions, it already is a must have. And it is really emphasizing the fact that it is no longer just about financial returns, but about sustainable value creation. So interestingly, yesterday I was talking to a client. They're in the automobile space, and they have the opportunity to invest in a startup in the US. That startup has developed some very powerful AI-driven solutions which can help them on the fleet mobility side. And one of the key questions they asked in one of the introductory conversations was, where are your backend computing based? How does it work? And how does your backend computing services provider manage sustainability? And there are enough and more examples. Right? In a couple of years back, a very large private equity fund walked away from a deal with an Indian chemicals company because during diligence, they spotted that there were some issues with the hazardous waste rules, and this just did not fly with the sustainability commitments that the fund had given to one of its investors. So it is also potentially a deal breaker. And on the other hand, if you've catered to this well, it can be a good valuation uptick. So if you look at Nestle's acquisition of Essentia Water in the US, the target had a very strong water stewardship and sustainability positioning scenario, and this really helped justify not just a premium valuation, but it also papered over the regulatory approvals to a very smooth path to closing. So increasingly, as Indian entrepreneurs are stepping out, Deepak explained that India is in a very different economic spin today, and I would say that there's of course the accomplished large business houses, but there's also a huge spate of, let's say, younger businesses which haven't achieved that same level of size and scale. The next generation is very keen to make a mark, is very keen to create their own legacy, and it is this generation which, when stepping out, is asking advisors such as us, and we are absolutely flagging to them that ESG is very important. So one, of course, is diligence. I think, like Deepak ji said, you need your red flags in place. And there, it's not just a matter of compliance, it's also a matter of culture. If you spot too many red flags, it's not just the monetary aspects that you need to look at, but is there a cultural issue in the target that you need to review? And you'll get this from all the public disclosures, the sustainability reports. If you're doing an integrity check, you may even see what sort of whistleblower complaints they have. There could be multiple scenarios. The next, I would say, is really in structuring the deal. And there are enough instances where offshore financing is being obtained, and financiers are now looking into what sort of ESG diligence has been done, what sort of implications are there, and whether there are sufficient reps, warranties, and indemnities for ESG compliance baked into the documents itself. And I would say most important is not just the transaction, because we'll do all this fancy paperwork, but it's really what are you doing afterwards. Let's say if you identify risks, those risks are still worth the transaction because the business case is significant enough. But then, are you instilling a culture of compliance? Are you causing the company to adopt some action plans? What is the board saying? Is there a top down relevance to ESG being given or not? Each of these aspects, before, during, and after the transaction, are relevant. Because let's be real, the regulatory pressure is mounting globally. Financing costs are going up. It is a matter not just of risk mitigation, but believe you me, it is a significant reputational risk. A single bad ESG call can lead to reputational damage, activist campaigns, minority and public shareholders, and for that matter, customers, because now customers are being asked to look at their supply chain, scrutinize what kind of ESG compliance is there. So really, to conclude, whichever sector you are in, whether in services or products or otherwise, ESG is here to stay. It has already made a significant dent in how people view their businesses. And for Indian companies looking to expand overseas, one would anticipate that overseas ESG reporting and requirements are maybe 2 steps ahead of India. You need to proactively address this. Back to you, Pooja.
Couldn't agree more, Samir. Recently, we had a similar experience where one of the US company, which was exploring a joint venture with a Gujarat-based manufacturer of raw products for food industry, the deal was called off because this manufacturer was buying potatoes, which is raw material, from farmers who engage child labor. We may look at very casually in India. And I tried to explain that it's not a conscious decision to employ a 14-year-old on farms. It's just a culturally ingrained thing. But the US team decided to walk out solely on that basis because it was a huge reputational risk. It was a listed company there. They couldn't risk anything with SEC, and the deal was called off solely because of that. So I think ESG is becoming very important for Indian companies to not only look outside, but also internalize that in their process. Somewhere in the beginning of the webinar, I mentioned that we need to learn from the common mistakes and just guide us each other. Maybe the audience will be interested to know. That's where I would bring in Chitan, because he may have the most objective views on what are the common mistakes, Chitan, that Indians are making, Indian companies, I mean, when they're doing cross-border transactions. And of course, we expect unfiltered answers from you here for learning.
Thanks very much for having us. Just to give a bit of background, and similar to Deepak, I'm just going to caveat that I'm a Singapore lawyer, but the firm is actually present in 10 jurisdictions across Southeast Asia. So we very often work on Southeast Asian deals and can give you a bit of the Southeast Asian perspective on things today. What we have seen an increase of in the last 12 to 18 months actually is an uptick in Indian companies coming to Southeast Asia to do transactions solely because of a value arbitrage opportunity, right? They're buying something at say 5x, 10x in Southeast Asia, bring it back to India, doing a capital markets listing at 30x. So that value opportunity is there, and we've seen quite a lot of private equity players actually driving, these transactions as bolt-ons in Southeast Asia. I'm going to quickly deal with a point which Samir mentioned about the rest of the world possibly being 2 steps ahead in ESG compliance as compared to India. In Singapore, I would say maybe slightly ahead of India in terms of ESG compliance. Thankfully for Indian companies, the rest of Southeast Asia maybe is on par with India or even behind, right? So that's not, whilst it's something to be focused on, and it's essentially creating, value, because many of the funds that are looking in this part of the world actually find these companies uninvestable. Similar to the same concerns you raised, Purti, but it's an opportunity for Indian corporates to then, fill in a space where the funds cannot fill. A common sort of mistake, and I'll talk through three key points, 2 of which I think Teja and Deepak already covered. The first one is that, there's a myth that, ASEAN, Southeast Asia is actually fairly homogeneous, right? Even though it is intended to be an economic bloc, it's very different from the way the European Union operates. You have Singapore, which is sort of very developed, very politically stable, common law system, Indian lawyers we're very familiar with. Malaysia as well, common law system, something we all know very well. But when it comes to the exciting markets in Southeast Asia, talking about your Vietnam, Indonesia, Thailand, these are all civil law countries, right? And the nuances that you have in each of these jurisdictions are actually very different from what we are used to seeing from a common law perspective. And I'll touch on a few of those in a minute. Deepak also talked about the marketplace. On paper, many of the Southeast Asian countries are open to foreign investment. They have obviously the same sort of negative lists, that India used to have a lot more significantly in the past. But whilst on paper, they may be open to foreign investment, the real question is, culturally, do you know the marketplace well enough, right? Do you know who the players are in the marketplace? It's one thing. Singapore, for example, I think Indian companies fairly comfortable doing business here. They know it's fairly stable. You don't need a good partner to be able to launch here and to do well. In other countries in the region where local state governments are often may not share the same view as the federal government, for example, you need to understand, that sort of nuance between federal and state. I give you an example of Malaysia and Johor, which is right across the causeway, and 30-minute drive from CBD in Singapore. For many years, the Johor state government was actually pushing for Singapore business and Singaporeans to invest in Johor. But that never really took off until the federal government started pushing, sort of 24 months ago, right? That's one. Number 2, understanding the partners that you're going to be working with in this part of the world. Similar to India, in many of the Southeast Asian countries, the strong families have very good business and political connections. And it's very important to consider whether or not they would be able partners, right? And as part of that process, you need to go through your commercial diligence to understand whether some of them are shrewder than others, some grayer than others, right? So that part is key. On the importance of commercial diligence, right? And this is not something which came up in a legal DD exercise. Recently, there was a client who was looking at undertaking an investment in one of the regional countries. And they found out about a potential change in law before there was a consultation paper that was published, right? And obviously, from their point of view, it changed the business and fundamental economics of the entire transaction. So that was aborted. The third point I want to cover, and I will go through this very briefly, and hopefully maybe later on in the panel discussion, I get a bit more opportunity to talk about. People, when they first invest or when they first do a transaction, they are thinking about the now, right? They're not thinking about the exit and the future proving of that transaction. And that can raise a number of issues. For example, if you think of a worst case scenario, what's the sort of compensation you have to pay in the event you have to undertake a mass redundancy exercise? You have some countries which are very employer friendly, like Singapore. On the other hand, you have at the other end of the spectrum, Indonesia, which is very employee friendly, where you could be paying, up to 20 months of severance and long-term service pay. There's also a multiplier effect on that 20-month number, depending on the reason, why termination is being sought. So future proofing, I think it's a very key point and very important. And I'll just pause there for a moment.
Excellent, Chitan. I think everybody has been speaking about cultural alignment. That seems to be the common theme of this webinar. That brings me back to discussion last week. I had a meeting with another law firm, which is an Asia-based law firm, and we were discussing when the whole China thing happened, when COVID hit, and India was supposed to benefit from all businesses being out of China, supply chain coming to India. His response was that it has all been diverted to Vietnam more than India, just because culturally Vietnam is more closer to China than it would be for India and China. Because culturally, again, this whole thought that all Asian countries are homogeneous may not be correct. In fact, within India also we are not homogeneous. Again, globally. Mr. Acharya, I want to bring the conversation back to you. We've discussed doing due diligence, understanding the territory, and of course, cultural alignment when we enter a new country. Besides that, Mr. Acharya, what do you think should be covered in what you mentioned, the red flags diligent? What are the areas that we should focus on, that you actually guide your businesses to be covered in there? And again, when you're appointing external counsels or telling your local teams when pursuing an asset or business, so to say, overseas.
So, Purti, it is very essential that we understand how the dynamics of corporate legal departments have changed over the time as well. There was a classical thinking earlier, which was prevailing for a long period of time, which said that corporate legal departments are like advisors to the business, and they work very closely, but they are at the end of the day advises the business on what to do and how to do it. And that has changed dramatically in last few years. Now, the way it has changed is that now legal is seen as a business partner, not only an advisor, but doing things hand in hand with the business teams and implementing, not only advising but implementing business projects as well. So that is a big change that has happened. One needs to understand that in a big corporates, legal departments are no longer seen as advisors and doing business at a distance, but they are also part of the business teams and involved with the business a little bit upfront. The second thing which has changed dramatically is the ESG laws are evolving in the developed market, and they are forcing those laws in a way onto the developing markets as well. I'll give you an example which is aptly applicable to cement business in which we are. We are one of the largest cement manufacturers. In metal businesses where we are in aluminium, copper, and other businesses in metal. And I can tell you CBAM today has become such a big issue for the industry in India, because within a year's time you will see now CBAM reporting has started, but now the other implementation will start in India. Of course, we in India have fundamental difference on the way CBAM is being implemented by EU, and there needs to be a discussion with EU in terms of the way EU wants to implement CBAM. But the implications for Indian businesses for non-compliance with CBAM is going to be dramatic, because if you are into a business which is exporting from India to EU, and if you are not able to get the credit for the taxes paid or a carbon credit for the which you have paid in their markets, then you will soon become uncompetitive in the EU market. And those markets where they have already, like China has, for example, already prepared themselves well ahead of time to implement CBAM, they will be successful in exporting their produce at the low, competitive rate, much competitive rates with lower tariff as against the Indian businesses which are not prepared with the CBAM regulatory framework. So I would say these are new challenges, like GDPR was the challenge when it was rolled out on 25th of May 2018. And a lot of businesses in India were not prepared at that time, and they had to, put their act together and make sure that if you have a data that is coming from EU or data that is going to EU, you have the right compliance framework that is implemented. Those are the things that businesses will have to work on, these new age laws. I understand the child labor, we understand the posh compliances, we understand the legal compliances that a business will have to do, but these are the newer challenges which are in the areas of CBAM. Tejal mentioned privacy law, which is going to really artificial intelligence and data transfer agreements. And these are the ones which are going to create huge, challenges for the global businesses running out of India. And that's one thing which we will have to be prepared for by partnering with the business. You see, legal lawyers know what are those challenges, right? It is the working within the businesses and preparing them to face these challenges is a real issue. How do you make sure that your businesses which are operating in these markets take these very seriously, take these compliances very seriously, and start to implement it now, as against waiting for the law to be effective? What we have seen many a times is that businesses want to wait for the regulation to come in, right? Wait for the laws to be effective. But look, by the time laws come in, it's too late already, right? So one has to be prepared ahead of time, and one has to be ready to be able to face these newer challenges that are going to come in the market. And CBAM is a very live example of the challenges that businesses, particularly global businesses, will face in European market for sure.
Purti, can I add a little bit to these two questions? I
In
think
fact, I was going to put you in, Tejal. Go ahead, please. Yeah.
no, just on these two questions is, one other aspect of mistakes. So one is that we've always looked at India from a cost perspective, low cost. So when you go overseas, you're also looking at cost. Okay, it's cost of everything. Indians are not used to a different cost structure. So I think that has become really important to understand as Indian companies are going up the value chain and they are making really more technology driven, high value business, acquisitions. That mindset during the acquisition stage should change. I think that's one big learning that we have. The second thing is Indian companies and Indians in general, and I think you'll see that a lot. I think Jitan will agree with me in Southeast Asia, is very relationship driven. So when we go overseas to do business, right, we are relationship driven people. And the connect of the leadership, whether it's an acquisition, whether it's setting up a new office, whether it's hiring talent overseas, I think the cultural aspect becomes, even more important because we are a relationship-based country, and we do business based on, trust and connect and all of it. It's not that transactional in the way we approach things. And the third thing I would say is we're now making acquisitions in AI. Okay, so there is this whole intangible we are buying where the due diligence is changing because it's what you're buying, how it's going to be used. And just like Deepak talked about, the CBAM, it's what is the philosophy which is going to drive the law that's going to come in the future. Earlier we used to always look at change in law provision saying if the tax rate changes, what do we do? But if the whole philosophy changes and the AI application changes, your entire business setup would go to naught, right? So I think that's where the ambiguity has increased a little bit beyond the traditional due diligence that is being done across.
Chitan, you have any insights on what Tejal just said? I mean, it was a beautiful
So
conversation.
I completely agree with Tejal, right? So very much like India, doing deals in Southeast Asia is very much relationship driven. Your bulge bracket private equities before they discovered India as the next frontier, they were in Southeast Asia 15, 20 years ago, set up $5 billion funds. They couldn't do a deal because they didn't know how to do deals where it was so relationship based and they were used, to the American and the European sort of mindset. So I think Southeast Asia trained them pretty well for India. What I would caveat and say is that relationships, whilst important at the promoter management level, it cannot get in the way of proper diligence and ensuring that you have your protective and governance measures in place. Because especially in the underdeveloped or the developing countries, key risks actually would be your conflicts of interest, related party transactions, and unintended technology transfer, right? When you're investing in these jurisdictions with partners. So I think that's especially important, something to be very mindful of. And the bigger corporates, like Wipro and ABG, I think those are covered. But it's the smaller corporates that really may not want to spend so much time on diligence, so much time on compliance or costs that these things really fall through the cracks. Before they know it, actually, someone's taken everything and run off.
Absolutely. So this is so interesting to me is because I was advising a large corporate group on a potential acquisition or a joint venture, so to say, in a underdeveloped country, Chitin, that you just mentioned, compared to India, of course. And again, we were told, oh, the promoter we may be king in India, but they're equally big there, so we have to keep it all fair. We cannot disturb him. He will call up the promoter, and it's a big deal, big deal. This was my first call from the client that, Purti, we're doing this deal, but let's not make it too lawyerly because the promoters have really good relationship. That evolved into when somebody said exit proofing the deal. Chitan, I believe it was you who said exit proofing. It was one of the hardest conversations that I had to do. But I deployed the same card that just like you are the king in India, if they are the king locally and they wanted to exit from India, how difficult would they make their lives? Just put yourself in the same shoes and let's talk exit proofing. You can do whatever that you're doing today, but let's talk exit proofing. It was a difficult conversation, and I think I got a lot of hate for it. But I think this goes back to what Mr. Acharya said, that the thought about legal is no longer a cost center, the word that was used mostly for us. Now they're looked as business partners who are advising on closing the deal and doing a real partnership rather than just signing a document today. That shift in mentality has really helped us. But Samir, with that, because you work so closely with Indian promoters and are guiding them all the time on entering overseas market, what are the strategies that you deploy, that you advise them on, that work best, that you when you're advising them on a new overseas acquisition? Because of course the promoters are very excited that they've spotted this partner and it's going to be a $1 billion deal. So how do you advise, and what are the strategies that you would deploy in such a conversation, without of course ringing the lawyer alarm bells off that they hate to
So, no, I think that's a very interesting one. And frankly, over the years, you realize that one of the most exhilarating parts of an acquisition is if you can help your clients buy and eventually achieve their objectives. So, from my perspective, the first and foremost strategy tends to be to understand what is the actual acquisition objective, because it's very easy to get lost. See, diligence is done in more or less the same way across the board. The documentation, give or take, tends to revolve here or there, but only if you truly understand what is it that they're trying to achieve through the investment or the acquisition is when you keep that central theme in mind throughout. Like, for example, there are clients of ours who've done acquisitions simply because they feel the product portfolio, the technology, is something so interesting and innovative that they could use it to expand their footprint. You tend to see certain jurisdictions, maybe out of Europe. China, I think, has other geopolitical things to be looked into. But when you look at Europe, a lot of Indian promoters now are going to Europe for that precise purpose. And it may not. The next question is, okay, you will make this. Where will you sell it? Do you want the existing customer base, or are you happy to bring that technology back to India, make here and sell from here? So these business conversations, I think, are very important because, as I said at the beginning, especially with the younger generation of Indian family-owned businesses, the younger generation are very eager, very exuberant to make their mark, build a legacy. And in that, there tends to be some impatience, but I would say there's a lot of willingness to move along, take some risks as long as they know about those risks. But in order to be able to suitably advise them on those risks, there needs to be some more time spent in terms of understanding the pure business rationale of it. Otherwise, that's something which we can struggle with. So that is one. Number two, both Chetan and Tejal spoke about it. It is not relationship driven. Look, at the end of the day, Indian businesses more than anybody else culturally tend to be a lot about, I know him, I will give him a call, she will listen to me, and so on and so forth. But you need your protection. But both of them have made the point, so I don't want to talk about that significantly further. But one example I want to give. So we actually had an instance where we were looking to buy something in Europe for a client. And eventually there was a financial sponsor at the top who wanted a clean exit, but there was a valuation mismatch. So the only way we could figure was buy a chunk now, which gave us control, and we'll buy a small stub later. That was the plan. But there were no conditionalities on it because being a financial sponsor, they said, look, we want no conditionalities on it. And there was some discussion between the person leading the transaction on our side and the person leading the transaction on their side, saying, look, don't worry, you're a nice person, I'm a nice person, we'll talk, we'll get things going, we'll get things moving. Lo and behold, 6 months into the transaction, that person found a better opportunity and moved on. The institution continued. To his credit, when there was a problem and our business person reached out to that individual, even though he was not in the organization, he managed to speak internally and get things aligned. But this is a rare occurrence. There are enough and more instances where you will find that people will just read the plain letter of the contract. So I think that it's important to build that clarity with Indian promoters, that you build the transaction based on trust, because trust is equally important. I'll give you enough instances where there are overseas founder startups, and founders need a little bit of mollycoddling, need a little bit of hand holding. So you do that, but it's a very fine balance. And I would say that the most important part really is to step in and try and neutralize the impact of complexity in laws. Fun examples, I think Tejal spoke about civil law being so different from common law. We were buying a company where one of the shareholders was from Eastern Europe, and we had to buy his shares governed under an Eastern European law contract. And lo and behold, we later learned that when an individual is selling shares under civil law and he has a spouse, and those shares form a certain value component of his overall estate, he needs the spouse's consent, otherwise that share transfer can be avoided later. That's a big learning for us. And to talk about this to the other side, and again, we had colleagues in that jurisdiction who were helping, but then we went into the niceties. We saw how to soften the blow so that the other person doesn't find it awkward. But we have to step in as trusted advisors and bridge that gap, because when we're dealing with really large, sophisticated clients with sophisticated in-house legal teams, such as, let's say, ABG or Wipro, it's great fun, because then you're just implementing, and there's a lot of back-end energies. But when you are dealing with, let's say, people who may not have the same level of experience, our responsibility goes up one notch. So I would say those are the three things really.
Excellent, Samir. I could see Chetan nodding vigorously on so many points that you mentioned, because I think they resonated with him so deeply. Chetan, unless you have any further guidance points, I have another question for Tejal, and I'm conscious we have time, but if you had something, because I could feel you wanted to agree with what Samir was saying.
No, the only point I wanted to agree with was actually spousal consent is actually a concept in Southeast Asia as well, in certain countries like Indonesia, for example. And it's not just a portion of the value of the estate. Any contract with an individual, actually, you need spousal consent. So even more restricted. Yeah. And contract with an Indonesian counterparty, you actually need it in local language translated. You have a dual language contract for it to be enforceable. So a lot of nuances here. Sorry, back to you.
On a lighter note, we have to also understand in Southeast Asia who actually controls the purse strings, because the person holding the share may not be the person actually making the decision. Because I've worked there for 11 years, so I understand exactly what you're saying.
Wow, learning for all of us. I think each time we enter a new country, we learn a new process or new protocol that we would have completely missed if we were not paying attention and asking the right questions to the advisors who are advising us. So thus far, we've spoken about entering, acquiring business, what risks to deal with. But now, Tejal, we'll have to bring you back here because you mentioned that you're almost in 65 countries globally and you have a large team that's sitting across. How do you ensure smooth collaboration between global teams, which is across multiple jurisdictions? Going back to your point and Mr. Acharya's point on cultural collaboration, how do you ensure that? Because one thing is to say it, but to actually run it smoothly, I mean, your experience must be incredible in that space and learnings for all of us, please.
So I think, look, these teams are pretty large. But like I said in the beginning, I think first thing is about mindset. What tends to also happen is for Indian companies, a bulk of their departments tend to be in India. A lot of leadership sits in India. A lot of the legal department sits in India. So one mindset I think is important is how do you not apply the Indian standard everywhere else, right?
Yeah.
So one is, of course, creating a global mindset because a lot of people in my team sitting in India, they support other countries. So it's very interesting dynamic that you have someone who's sitting in Bangalore who's supporting the US or supporting France, and they need to also rely on the local experts in order to do their roles. The second thing I think is we shouldn't underestimate the investment in tools. Because at the end of the day, collab tools, whether it is Teams, whether it is, I think COVID changed everything for us with all of these video calls, and it really brought people together. Plus, of course, these tools that you have for regulatory compliances, application of global policies. How do you sort of sensitize everybody to sort of the vast space there is? Investment, I think, is something that you have to do. And then it's the way you purpose your organization. So the way we purpose the organization is a lot of the generalist work can be done in India. A lot of the contracting gets done in India. But if you take an expertise like employment law or immigration, or litigation in the US. For example, Indian lawyers are not trained to do class action suits. So you need somebody who's based in the US who can manage the US system. So I think a combination of the way you structure generalist based in probably India or another sort of more economical jurisdiction with specific experts sitting outside so that you have a cross-fertilization. Obviously, we all do these rhythms of regular calls, regular catch-ups. In fact, I have a monthly regulatory call, which people go around the world explaining something new that's come up in their jurisdiction. And we don't restrict it only to the lawyer who deals with that jurisdiction. We inform everybody in the group because there's always a learning for someone from what's happening somewhere else. And then that gives them that global mindset. You also have, centralized space where you put in all your regulatory requirements. All our policies are now in one particular place, accessible to everybody across. Because what we also felt is, people have it in their email, or when someone leaves the organization, you leave with the knowledge. So a lot of this globally is available to everyone. So no substitute for that, no substitute for early awareness. So sharing what's happening in one place will quickly translate to another. We also have centralized teams where you have data privacy or artificial intelligence or cybersecurity. You have a centralized global teams that function across the world. So I think structure and organization really matters to make a global team work.
Mm. Excellent. And Tejal, this also ties into what Mr. Acharya was indicating about having the foresight to plan for issues which may come up, not just for anything that you've already experienced and then you're implementing in your learnings. Mr. Acharya, now you mentioned that you are in 41 jurisdictions, and while Tejal is dealing with IT, you are dealing with these highly regulated industries like cement and metals. And how are you managing to mitigate the risks, or what do you do to help mitigate or ensure that these global markets are all aligned and there's cohesiveness in the approach?
Yeah, Purti. So for us, there is a one more layer of complexity in our group is that it's not one homogeneous business that we are talking about, because in our group there are multiple businesses, and one business has nothing common with the other business. uh, there are businesses which have a lot of commonalities, metal, but there are other businesses which are fashion, and the other business is a restaurant business that is, very little in common in terms of regulatory aspect and all of that. So for me, and we have our team, which is what, around 450 lawyers globally. And most important, in my view, for us in the ABG is to have a common vision for all the lawyers. Because unless you have that common vision and you know, lay that vision out, you communicate that vision, and people understand that vision very clearly, it is impossible for you to get 450 lawyers to get together and work in one direction, right? Directionally, they have to all work in the same direction. Some laws are more important to some businesses, like you mentioned, cement and metal businesses. So metal business has its own nuances. Their understanding of what is the, how the price mechanism works at the London Metal Exchange, and how that translates into the business impact for, our metal companies, very different from what impacts the, our fashion and retail business in India. So our function in legal, therefore, has to have one common vision, and people need to understand that vision in more or less similar way. Otherwise, it is impossible for us to manage the function which is going in the same direction. So I think that is first aspect of the culture that we manage. The second most important part I would share is, we operate in multiple countries, and we work with outside councils in those countries, and therefore we need to understand the cultural aspect of the countries where we operate, and how those lawyers understand and how they work with you needs to be understood very categorically and clearly. I'll give you one very simple example. In India, we are very much used to, filing a writ petition, filing a challenge, filing a lawsuit against the government, whether it is the local government, whether it is the state government, whether it is the central government. In fact, government is the biggest litigator in India, right? We all know. But when you apply the same thing, for example, in China or in Japan, you dare not file a lawsuit against the government, because the moment you do that, the impact of that on your business can be catastrophic. We lawyers who are in the Indian part of the business and would want to, say that this is how you should run the litigation in Japan by filing a lawsuit against the government, is likely to be doomed completely, because those are the cultural nuances that people must understand, that it is not the culture in Japan or in China for the enterprises to file a lawsuit against the government. You have to go and talk to them, resolve this issue by having a discussion, by having a dialogue, not by filing a lawsuit. Similarly, I'll give you one more example which will be, very interesting for the audience to know. We generally think that, oh, there are 4 or 5 different points of view. We need to resolve these points of view. Let's call a meeting. Let everybody come into the meeting and let's resolve thrash out those points of view. Right? Try doing that in China and Japan. It will fail miserably. Right? So the way it works in Japan is that you set up one-on-one meetings with each opinion maker. Before the meeting is held, you have your own meetings, align your agenda one-on-one with everybody, and then have a formal meeting where everybody will nod and say, yes, we agree. Right? And that's how the meetings are held. You don't really go out and hold your meeting in a true American way and thresh the issues out. It doesn't work in Japan that way. It doesn't work in China that way. The way it works in these markets is that you go talk to the opinion maker, depending upon your hierarchy in the organization, he may meet you or she may meet you or she may not even meet you. So figure out the right level of hierarchy to engage them and then have a discussion and give them a face. One of the other thing which is very important to know in the Oriental culture is that in a meeting, you have to give a face to the other side, which means you can't discredit somebody openly. And the moment you do that, you would have lost that person forever. That person would become, your enemy forever. And that kind of thing, which is very common in other markets where people call spade a spade, like in the US, it's a cultural aspect again. It doesn't work in many of the Oriental culture, in many of the markets in Southeast Asia, where you have to be polite, you have to be respectful, you have to, put your point forward in a very respectful manner without really impacting the individual's ego. Because the moment you hurt somebody's ego there, you've lost that person forever. So those cultural aspects are, I would say, the most important part for the lawyers to understand and understand and work with. I'll give you one more example. If you have a meeting and if you have invited a person in a meeting which is from Germany, you dare not go to the meeting 5 minutes late. If you go 5 minutes late, that person would log off and say, okay, now set up another meeting. You have to be punctual, you have to be on time, and you have to be dot on time. If you have a meeting with a German lawyer or a German business person, because their value, or a Swiss for that matter, Swiss lawyer or a Swiss business person, their value of time is very immensely important to them. They value people who come on time. So these are the cultural aspects that you must keep in mind as you work with your colleagues, as you work with your business people, whether internal or external, as you deal with them. These are some of the points that we must keep in mind while dealing with them.
If I can, Purti, just very quickly add two interesting
Yes,
anecdotes to what
Yes, please.
Deepak ji. So for the Swiss, you can't reach late. You can't also reach very early. So you can't reach 15, 20 minutes, half an hour before the meeting. Please wait outside. Enter the building only 5 or 10 minutes before. So on time means not before, not after. And we talk about government perception. So we spoke of the West, we spoke of the Far East, we spoke of the Southeast. Very interestingly, for one client on the food and beverages side, we were buying an asset in Africa. A very different perspective, like I said. So we received an interesting request saying that for closing, they had invited a very senior government functionary, president, prime minister, etc., of their government. They said, on a reciprocal basis, can you please invite the prime minister of India or the president of India for the closing? So each and every country's perception of their government and how closely they can interact is so different.
Yeah. Yeah, I think Mr. Acharya, the approvals that you were speaking for the Japan, the layer by layer, I call ringy, because that's the word I learned when I was doing a deal for an Indian promoter with a Japanese partner, and that word is ingrained in my head because we couldn't fathom what they're speaking of, and then when we learned, we could never unlearn that learning for life. I mean, as much as I love this conversation, would love to keep it going. Unfortunately, we are running short of time. I had promised the audience that I would pick some of their questions, and it's been a busy buzzing chat room given the nature of the conversation we've had. So before I wrap up, I'll just pick up a few audience questions just to keep the conversation going. So one of the questions Chitran is directed towards you. Can you guide us as to how can Indian companies prepare for regulatory approvals in Southeast Asian markets?
I don't think there's a one-size-fits-all answer to that particular question, given the sort of nuances you have in the different markets. You need to see whether it's organic growth or it's an M&A transaction. Obviously, with organic growth, right, my advice would be to see, look at the promotion board equivalent in each particular jurisdiction, right? Singapore EDB, for example, Malaysia Malaysia, you call it MIDA. I think that's a good starting point to understand the sort of approvals you need, number one, and number two, more importantly, the sort of grants you can get in setting up in that particular country, whether tax incentives or so on. In a bid auction sort of situation, an M&A transaction, again, it's going down to be the local professionals that you use and how well they know the market. And given relationships have been a central core theme of today's discussion, in many of the Southeast Asian jurisdictions outside of Singapore, to be clear, these relationships do help in understanding the sort of regulatory approvals that are required, especially where the law is not clear. And you can have that informal consultation where you're doing similar applications commonly. This would be the case for Malaysia, Indonesia, Thailand, Vietnam even, right? Singapore, unfortunately, any question you ask, they say, please write in. The upside to that is they tend to respond slightly quicker.
Thank you so much, Chetan. The next question, I think it's directed to Mr. Achar, but I would also like Tejal to step in because it's a common guiding for both. What is the advice that you would give to an in-house counsel of Indian companies looking at overseas expansion? And most of our target audience is looking forward to both insights from both of you. Over to both of you, please.
So, I'll say two very important things, which will, I don't know if everybody would agree to this or not, but I would certainly want to be controversial on this and share my 2 cents. So first and foremost is that, unlearn something that you have learned in India, because our systems in India are applicable to legal systems for India, right? Your litigation strategy or, what you have learned in India is apt for India. But when you're dealing with markets outside of India, keep that learning aside and have a fresh mind and think about what is applicable, relevant, what is required for you to succeed in that local market. So unlearning what you've learned in India and looking at it from the country perspective becomes very, very important. And the second point, which is more important, common sense. I think common sense for general counsel is the most important point that we overlook many a times. And, one should learn how to distinguish what is right from what is wrong. And that is universal, right? That is very universal. What is right in India. What is right in any other market, right? From a ethical aspect, from a dealing with it in a commonsensical point of view. So never ever never ever lose sight of what is right from a commonsensical point of view, and don't really try to over-engineer something in the markets, and be really try to be close to the market as much as possible, but keep a common sense, at the same time. So those are the 2 things I would suggest lawyers should look at for sure.
Yeah, I would say, Purti, that's like really good advice. I'll just add a couple. I think one is personal humility. We don't know it all, and to really give the respect and the ear to something different, I think is important. So on a personal ground, go to the experts, understand the experts. If things don't make sense, sometimes they really don't make sense, but they are what the law is. So, you accept it. And the second thing I would say, which is really opposite of the humility from a transactional or a contractual negotiation or any other perspective, is that India is no longer just subservient service provider. The country has arrived. And so when we do negotiate and we do have the conversations, it shouldn't be that we can't have a point of view, or we can't negotiate hard, or we don't have leverage, because that has tended to be a little bit of our approach in the past, which is, we can't say anything to this client, or we can't say anything to this company or this partner because, we are in some way lesser, which has really changed. So I would say get your seat at the table, hold that seat on a global stage. Those would be what I would add to Deepak's really good points.
Excellent. I mean, we are all taking notes and hopefully learning a lot from it. Last question, Samir, for you from the audience is: you did mention speaking to the promoters and devising a strategy to enter. Now, once we've entered, what are the processes or guidance that you would give to the promoters for integration of these overseas business, and what challenges would you guide them on?
I think just because we're short on time, I'll keep it to four things. We've spoken of culture enough, and it's really a question of assimilating people very well. We've had instances where Indian incentive systems haven't worked for European sales teams. We've had instances where just the fast-paced style of Indian communication has been perceived as very aggressive, very confrontational. Um, Again, in India, we tend to sometimes work weekends, sometimes work holidays. I think our understanding of work-life balance is very different, depending, of course, on the organizational culture. So I would say it's very important to not have those sorts of disconnects over time. One interesting scenario was we were negotiating a CEO agreement for the founder who was to stay on. And he said working hours Monday to Friday, and that became a huge issue because we said you work to get the work done. You're in a leadership role. You can't say I won't pick up the phone on a Sunday. But again, those things can be solved with conversations. The second is operational integration, and there are some peculiarities that come with India. Most of the time we look at finance, we have a very different financial year. Ours runs from April to March. Theirs tends to be different. So there'll be a whole host of things operationally which are not very easy to integrate, but mostly you will have spotted things in diligence. Are there some records missing? Are there some processes that you need to solve? It's important to hold those and conclude those, not lose sight of those. It's not as though the transaction is done as soon as you've signed the papers. And I would say really the last one is talent retention. I mean, yes, the population of the world is exploding, but it's largely because two countries constitute almost 35-40% of the world's population. Most other demographies where we go and invest, where our clients go and invest, the demographic dividend is not as vast and expansive as India is. And a lot of our clients over time then struggle to retain talent. And yes, it's possible to send your people from India, but then the local assimilation is just not the same. And I would say the last instance is learn from your mistakes. I think we have one client who practices a status where every time they conclude a project or even a mini project, they write a short report, half page, what, where, why, and how. And they focus on their failures as opposed to focusing on their successes. Yes, of course, the successes you celebrate, but you learn from the mistakes. And that tends to work very well. And then replicate those mistakes in subsequent acquisitions. So PMI, one can speak enough about. But that's really where you extract value for all the money that you've paid. So I'll keep that brief, Purti.
I'm sorry for this to end today, but I just can't thank our panelists enough for this deeply insightful and practical webinar. I certainly have learned a lot. Following are some of my key takeaways and learnings from this session. I'm trying to summarize, please bear with me. The theme is, of course, geopolitical risks and cultural alignment, understanding and key considerations of the territory that you're entering into. There's also very important consideration of ability to adapt to new laws and territorial consideration. You have to be open to adapt to that and change your thinking. Financial returns, are you chasing financial returns versus sustainable growth, not just for the group locally, but also globally? And lastly, what they both said is future proofing. What Mr. Acharya emphasized, unlearning and then adapting. And what Tejal explained very well is maintaining humility while also no harm in asking what you want. Where you're entering, it doesn't matter. It's always okay to ask for what you want. There's no such thing as anything that a wrong question, so to say. Finally, I would like to thank all the panel members for sharing their expertise and experience with us today. You were simply outstanding. Thank you so much for making time for this. Also, thanks to you, our audience, for your attention and your questions. I hope you found the webinar interesting and a worthwhile investment of your time. We certainly enjoyed bringing it to you. After the webinar, we will send you a copy of today's presentation materials, summary notes, and a link to the webinar recording. You will also separately receive a request for your feedback on the webinar. Those who were not able to participate in the poll, Please take some time to send us your feedback, comments, criticism, and hopefully even some compliments. The form takes less than 1 minute to complete. If you're interested in in-house training or any other matters arising from this webinar, please do not hesitate to contact us. Our contact information is on the contact slide at the end of this webinar. Thank you for your attendance today, and we look forward to being with you again at the In-House Council Forum. Thank you, everyone.
Thanks, everybody.
Thank you.
Thank you.